In today's update, we explore the latest shifts in the cryptocurrency market, highlighting several major developments that have stirred both investors and crypto enthusiasts. A key highlight involves XRP, which has recently seen a spike in market activity due to pivotal court decisions that have injected renewed volatility and interest into its trading patterns. These legal outcomes may prove transformative for XRP's future role and its perception within the broader digital asset environment. We also turn our attention to recent moves by the Federal Reserve, as its monetary policy decisions continue to ripple across all financial sectors, including crypto. The Fed's stance plays a crucial role in shaping market attitudes and investor decisions, making it a central point of interest. Meanwhile, Ethereum remains a cornerstone of the crypto space, especially as it progresses through its transition to a proof-of-stake system. Tracking Ethereum's price behavior is vital, particularly as its role in the DeFi sector evolves. Network limitations such as congestion and steep gas fees have created roadblocks, potentially slowing growth and raising questions about scalability. At the same time, Bitcoin maintains its leadership position, showing strong bullish behavior as its value climbs, drawing in both new participants and seasoned traders, and infusing the market with a wave of optimism. Conversely, Ethereum's headwinds like decreased activity, lighter transaction volumes, and the shifting behavior of major holders have created a more cautious outlook, especially with projections suggesting potential price dips if current patterns persist. XRP, on the other hand, appears to be gaining traction, bolstered by strong support levels, notable accumulation by large investors, and classic bullish technical indicators such as ascending triangles and flags. These signs have fueled speculation of a possible breakout, with analysts eyeing a short-term rally if conditions remain favorable. The confluence of these signals, ranging from chart patterns to whale activity, paints a picture of building momentum. In parallel, a massive $2 billion shift of USDT across multiple blockchains has drawn attention, signaling strategic positioning by whales and institutional players looking to exploit liquidity and yield across diverse DeFi platforms. This movement also underscores USDT's significance as a stable asset, increasingly trusted and utilized for cross-chain financial strategies. Taken together, these unfolding events reveal a market in flux marked by growth, uncertainty, and opportunity, where staying informed is essential for crafting sound investment approaches in the fast-moving world of digital currencies. The movement of USDT across multiple blockchain networks holds considerable influence over the broader cryptocurrency market, given its status as one of the most heavily utilized stablecoins. As USDT flows between chains, it can impact overall trading volumes and liquidity on various platforms. This enhanced liquidity often fuels increased trading activity, which may lead to price surges in other digital assets as traders pursue arbitrage opportunities. Moreover, such cross-chain movement could reflect a shift in market sentiment, particularly as institutional players begin to adopt more complex, multi-chain strategies. Should more investors embrace this approach, it could create a ripple effect, strengthening the interconnectedness among blockchain ecosystems and supporting a more fluid and resilient crypto landscape. In essence, the bridging of USDT marks a potentially transformative moment, with the power to alter trading behaviors and investor tactics significantly. When analyzing the technical patterns of XRP, it's crucial to evaluate shorter time frames like the 1-hour or 4-hour charts, as they offer a finer, more detailed perspective on market fluctuations. These charts are especially useful for identifying optimal entry and exit points in a volatile trading environment. Key tools such as the Relative Strength Index, RSI, and the Moving Average Convergence Divergence, MACD, are invaluable here. Presently, XRP's RSI sits near the midline, signaling a neutral market stance that might precede either a consolidation phase or a decisive breakout. At the same time, The MACD has recently shown a bullish crossover, hinting at the potential for upward momentum. Another technical factor to monitor is the behavior of Bollinger Bands. The recent narrowing of these bands suggests a period of reduced volatility, often a prelude to a sharp price movement. A sudden expansion in the bands would likely indicate increased volatility, offering strategic opportunities for traders. In sum, analyzing XRP through lower time frames and core indicators like the RSI, MACD, and Bollinger Bands provides meaningful insights that can guide trading decisions in a fast-moving market. Looking ahead, several key macroeconomic factors could influence the direction of the crypto market. One of the most notable is the prospect of interest rate cuts from central banks such as the US Federal Reserve. Lower interest rates typically inject liquidity into the financial system, prompting greater investment in high-risk assets like cryptocurrencies. Historically, such environments have been associated with strong upward price movements in the crypto space, as investors seek alternatives to traditional, lower-yield instruments. The link between liquidity and crypto performance is well documented. As liquidity increases, trading activity usually intensifies, pushing prices higher. Alongside this, institutional investors are becoming increasingly active in the space, recognizing crypto's potential as a legitimate asset class. Their involvement adds credibility and stability to the market, further boosting overall sentiment. Taken together, the likelihood of falling interest rates, historical patterns of price rallies driven by liquidity, and rising institutional participation point to a favorable outlook for the cryptocurrency sector. As optimism grows, staying informed and adaptable will be key for investors looking to seize emerging opportunities. In this video, we've covered important developments in the crypto market, focusing particularly on XRP and Ethereum. For XRP, recent indicators such as solid support zones and increased activity from large holders suggest potential for a breakout, offering an intriguing opportunity for investors. On the other hand, Ethereum is facing some headwinds, including falling gas fees, lower trading activity, and significant wallet sell-offs, all of which raise concerns about its near-term performance. These contrasting dynamics present a mixed but insightful picture of the market. If you found this analysis useful, please consider supporting our channel by liking the video, subscribing, and sharing it with others in the crypto community. Your engagement enables us to keep delivering in-depth updates, market analysis, and strategic guidance. Be sure to explore more of our content for further insights into cryptocurrency trends and opportunities. Thanks for tuning in. We look forward to having you join us again in the next video.